Hello everyone, welcome to today's backtesting video on Aussie dollar. I've been doing a couple of days, well, literally a couple of days, just 2 days, just trying to see how it worked out on this pair and if it's a pair that we could have taken advantage of. And just an FYI is that this is, I wouldn't really call it backtesting. It's just going in hindsight and seeing what happened through this session and what we could have done about it. Not actually replaying the bars and everything, you know, just seeing what actually happened through price and how we could have taken advantage of it or how we could have taken losses maybe. So this is exactly what we'll do. We'll trade between 7 and 10:30. After that, we stop basically backtesting, or let's just call it backtesting. And we're going to be looking at the 8:30 open. We're going to be looking at the midnight open, just to keep in mind those two levels that, as we know, are quite important, and try to trade in the direction that we're given by them, right? So if we look at this day, which is June 15th, it's this week, I think. Price opened midnight on this. Actually, there with this other line opened on this. Just call it midnight. Trades lower, somewhat aggressively, then starts pushing higher. Range, impulsive move up. And when we get into the session, we see that price has been pushing higher. So the session begins at 8:30, which is here, right? Yeah, here. Let's call it session. And what is it that we get through the session? Well, through the open. It immediately starts trading aggressively to the upside, then lower, grand break in the low, ranging a bit, aggressively going lower. And what is it that we have here to the left? A low that is swept. Short-term low being swept. So run on SSL and bottom. Okay. Price, so basically it starts pushing aggressively to the downside. Do we really go for that? I wouldn't really say so, because midnight open down, now aggressively higher. We could go to a daily chart and see if we're maybe filling up something here. Something I didn't really think of. Let's look at it. Well, sure, we did have this, right? This high, which was basically the fair value gap. So maybe some way we could have thought this was a potential area to look for price to get to. But I don't think I would have done that. I would have actually expected a bearish day. But again, the fact that we expect a bearish day due to this or that doesn't really mean we can... Oh, look at that. Equal highs. Quite clear equal highs. That doesn't mean that we are just going to force that direction, right? So yeah, just wanted to clear that up. Okay, so yeah, thing is, midnight opens lower, then aggressively starts pushing higher. We have fair value gap here that was never traded into, fair value gap here, which is traded by this and then continues higher. And now we have this tiny bit of a low, which price opens on New York quite close. And here's the thing, right? So New York opens, aggressively starts pushing higher. So we could have thought of sells for a moment. Maybe looking for this low, maybe this equal lows that we have here, or this ones as well. Or maybe just get to the fair value gap that we had probably on this few candles. Potentially could have thought of that. So here's the thing. NY opens, trades aggressively to the upside. Now, we definitely do get an entry, at least on the 5 minute. We could check the 1 minute, which is what I do. And we have that. And what happens when price gets there? So it trades into that. Actually, this is probably the close. Trades into that aggressively to the upside. Tiny bit of a fair value gap. Potentially an entry. Stop should have been below this low at the very minimum. And that fails. So we could say that this could have been a loss that we could have taken on this 5 minute fair value gap, right? On this fair value gap there. Then continues trading lower aggressively. could have tried to sold, but I don't think I would have done that. Mostly because this is just the 1 minute. On the 5 minute, do we really get anything? Price trades aggressively to the upside. It does have a tiny bit of a fair value gap here, but the week of it, oh yeah, this is actually the week of it. Okay, so till that week is not broken, we're within a fair value gap. Then lower aggression here, fair value gap respected, then this. This could have been a sell, stop loss all the way up here. The thing is that we should have seen not only the low to the left, which is an important high in the 5 and 15, important low, sorry, but this mostly clean equal lows. The price a little bit after the New York Open, it trades aggressively to the downside and changes direction. What is that we have here? Well, we have the market shift is here. Could have considered it from here or here, right? Thing is that changes the trend, no fair value gap till this point, and here we can see a little bit better how that's how we have a little bit of a better fair value gap, much larger than expected per se. Not than expected, sorry, but compared to the one that we had back here, which is this one, I think in my opinion it's definitely something. Now again, we probably could have taken a loss on this one. After that, I don't really think I would have traded to the downside. But again, I don't think I would have been expecting sells, mostly due to the midnight open, right? Trades lower, then aggressively to the upside, and that's just being respected so far. And then we see this, which is we have the New York Open here, trades a bit lower, then higher. What is it that it does on this one? Well, generate liquidity, right? Also, this bit of a fair value gap in this could have been traded, but we have clean equal lows there. I don't know. I don't think so. Trades aggressively to the downside, aggressively to the upside. This could have been the first entry. And after that, well, what is it that we're targeting? The high, definitely. Could have gone for the equal highs on the left, which was this line, which is reached later, but yeah, we would have had to weather all of this, right? Which is a little bit complicated. This could have been a pretty good target, and honestly with the entry we could have gotten stop loss below is low, but I've had a good risk to reward ratio, probably 5 to 6. Wanted to check the 5. So the 5 has one here, but never traded into one here, and it is traded, but it is traded after it had already nicked the high of the liquidity. So this definitely would have not been even considered, and well, that's really pretty much it. Okay, good day, just potentially 2 losses. I don't think I would have tried to sold, so potentially just 1 loss, and a pretty good take profit. The 16th. No, 15th. Okay, let's get right into the next one. Okay. Midnight open is up here. It opens here, trades a bit higher, then aggressively lower. Midnight. So it trades here, it goes a bit to the upside. It does feel a little bit of an imbalance. This very tiny, as you can see. Starts going lower. What is it that we have? This, I think this is very important though, because it definitely has liquidity. A lot of buy stops up here, a lot of stop losses up here as well. Just a lot, right? So that's taken, then aggression to the downside, fair value gap respected here, fair value gap mitigated there, tiny bit of a fair value gap, never traded, another fair value gap here. So thing is that when we get into a chart at 7, or maybe even before that, we can see how the trend has already been set to bearish, right? So that's likely what we're going to be looking for. Now, we could look for the opportunities here, which actually I didn't do with the previous day, but suppose we're expecting for that bearish day. Let's actually look at the 5 first, because we need the fair value gaps in the 5 at the very least. Well, let's just do the 5 minute. It might be easier. So trades aggressively lower, market shift, fair value gap, potential entry. And a clear run is as well. Another fair value gap here, traded as well. Another one here. Could have been tried to sold. Could have tried it to sell from this. Would have been approximately the same scenario, but of course the lower one would have had a much higher stop loss. And then, well, let's see. I have a tiny bit one here, but no. This one doesn't break the high. I'm gonna ignore those. We're gonna go straight for this one. Another potential sell, also swap liquidity, so you can see here how it generates another high pretty close to the previous one. Applies out liquidity, swaps that, aggression to the downside, fair value gap, another fair value gap on this right here. Keep in mind that in lower time frames, let's actually look at them if we can see some interest. Here's the first 5 minute fair value gap. Trades into it, aggression, fair value gap, that's an entry. So another entry here. Let's just go to the 5 minute. 5 minute mitigates this fair value gap on this week. Aggression with fair value gap, it's an entry. 5 minute trades into that. There's aggression here, clear fair value gap, trades into that, respects the high, continues to go lower. Here we even have a fair value gap that is traded into and works. See how this didn't create a fair value gap, this didn't create a fair value gap, this one does create a fair value gap, this one here. The thing is that this structure here doesn't really create fair value gaps until this one, and this one is the actual one that worked out. That's something to just keep in mind. 5 minute fair value gap, first reaction, no fair value gap. Second reaction, fair value gap on this, stop loss up here, definitely an entry. Another 5 minute fair value gap, aggression, fair value gap, traded, stop loss above the high, but failed as a loss. Could have tried to continue to sell from this point, which would have been another loss. Aggressively to the downside, and that's all that we had from the 5, isn't it? Yeah, but you can see how it was quite clean. It's just from the 1 minute, from the 5 minutes, sorry, but even from the 1 minute was definitely many opportunities that we could have got through London. Although, as far as I understand, London begins at 2 New York session, or the London kill zone at least, to 5 New York time. So yeah, would have been a bit difficult because 2 begins here. So unless we actually caught this one, we would have gotten a lot of impulse and then retracement that we would have not been able to take advantage of. So now let's look at the 830 open. 830 opened here. Largest session. It was trading higher already. What is it that we have to left? Liquidity, of course. So I'm gonna do it like this. Let's actually do this. Have PSL on this side. If we're expecting the very side, we're just gonna be doing this exactly. PSL. BSL. What do I mean with this? Well, New York opens and it's trading aggressively to upside. We have fair value gaps in the 5 minute, potentially fair value gaps in the 50 minute as well, but I'm not really going to be looking for buys. The reason for that is that I'm expecting a bearish continuation. I could be wrong about the bias. This week I was wrong on the bias on Thursday and forced probably 3 sells that could have been really easily avoided. But the rest of the days I was fine on the bias, which led me to take good profits on those days and don't really bother or worry about those days like this. Oh, well, not like this, sorry, but like Thursday, which I didn't really manage to get the bias correct. So a lot of buy side liquidity. Now we get a tiny bit of a range. We look at the 5. So I have a question that I ask myself that I kind of need to figure out before next week. Well, before Monday, basically. And it is, so we New York session, supposedly when it opens, it should trade against that direction, which in this case it does, right? Because at the end of the day, this is what we would have targeted, right? And simple as that. And the thing is that, as an example, that Thursday, if I would have waited for 5-minute market shift or 5-minute fair value gap, or the 1 minute to create a fair value gap with a market shift and maybe sweep in some liquidity, I might would have avoided 2 out of 3 losses, or all of them if I would have for the 5-minute fair value gap. But at the same time, is that really necessary? I think this might be a good example, because I'm just gonna utilize, I'm gonna wait for the displacement to happen in the 5 to then go lower into the 1, but we will also look at the opportunities in the 1 minute and see if they were worth it or not. And keep in mind that we're going to be trying to sell every single time that we can, right? Presumably, as an example, myself on Wednesday, I think it was, I was pretty close to the New York Open, so I decided to not trade at that moment and just wait for the New York Open to happen and then to see what we can do, right? And what happened, as an example, is that I think I missed out on a loss doing that. Of course, as an example, what I do between 7 to 10 before, so actually 7 to 8:30, I trade but with paper trading. And from 8:30 and ahead, that's when I trade with my challenge account, as an example, right? Or my funded account. So yeah, as an example, here we have an opportunity, maybe here to the left. What is it that we have to the left? We have a lot of liquidity, it has been swept, aggression, and that's a potential entry that I could have taken, right? There's no fair value gap here. There's no fair value gap here. So this is the first sell. Then we could have had this one, which is not traded into it. Then we could have this one, which would have been traded here. And if we were aiming for this low, then yeah, we would have definitely been fine. But this kind of entry is a bit difficult, because I prefer waiting to see if the manipulation in New York happens or not. So yeah, session opens here, starts to push aggressively. What is that we're looking for in the 1 minute specifically? Well, the 1 minute just needs a market shift and a not a market shift, sorry, aggression and fair value gap, right? Because we're expecting all of this to be just a tiny bit of a manipulation, right? What is that we get? So at this point, at this high, all of the buy side liquidity, unless we were expecting this one to be taken, which of course we could have, but this high, as example, swap liquidity, right? And now this high presumably will take liquidity without taking really this high, because why would he take it? Why would he need to take that high? I don't know. That's the way that I see it, at least. If a high has taken buy side liquidity or sell side liquidity, whatever it is, next move, if the trend is going to be respected, I don't really see the reason why price would actually break that, right? But it could definitely. So that's why we use stop losses, right? When we enter trades. So what is that it generates here? A bit of liquidity. There's no fair value gap in this structure. Trades above this high. We had already traded above all of that. And what is that we see? Aggression. Fair value gap. That's an entry. In my opinion, this is definitely fair, unless again we're waiting for that 5-minute displacement to then look for opportunities in lower time frames. So that would have definitely been a loss. But look at that. Look at what happens later. Price ends up creating buy side liquidity in the 1 minute, basically by creating relatively equal highs, right? Which, as an example, I suppose we're still waiting for the 1 minute to change the trend and counted this tiny bit of a wick above this high as enough. We have a market shift by breaking this low and a tiny bit of an imbalance. Then we could have traded that as well. That could have been a loss. So let's just point it out, because yeah, why not? That's an entry, right? Another loss. That's fine. Are we going to continue to force sells? Well, we have to keep in mind, as an example, I wouldn't really count it as forcing sells right now, because we have to check the 5 and look at where the fair value gap is. We have the low here, the high here. So until price doesn't even trade into that, at the very least, we can't really do that much. We can't really look for buys. Just want to clarify that. And still, we are sticking to the trend. Maybe you can have somewhat of a rule. As an example, I don't want to take more than 4 losses trying to go in a sort of direction that price just not going to, right? So as an example, I prefer taking 2 to 3 losses in one direction, and if that's not working out, the last opportunity I might take it in favor of that trend that in my opinion is not the actual trend, it's just a manipulation move. or just completely avoid it and wait for something really clear to happen for the direction that I was expecting at first. So this could have been 2 losses, but what is it that we get? Here we have an aggression to the upside, which swaps liquidity to the upside. We have aggression to the downside, but basically right after the buy side liquidity was taken. It doesn't really break the structure unless we count this week, which, well, actually it doesn't even break that week, but it doesn't really break structure, but it does generate clear displacement with a fair value gap. That's potentially our first profitable entry. And again, keep in mind that we're going all the way down to the low where this entire thing began, which is here, target sells out liquidity. So that could have been a first entry. That would have worked out, of course. What is that we get? A little bit of a range, aggression to the downside. We have another fair value gap here where we could have sold, another fair value gap here where we could have sold. If we sold from this one, what is it that we're using? Stop loss all the way up here, right? So keep in mind there's also a 5-minute fair value gap. So at this point, by just waiting for the 5-minute displacement and fair value gap to then trade into the 1 minute, we would have missed out on a good opportunity that would have lasted through the entire thing, and 2 losses, right? So we would have avoided 2 losses, but also would have avoided good take profit, which if we look for the risk to reward ratio, we're talking about 2 are lost, but we have to add this, which is 4R. So that's basically 2.6R on our advantage at the time. But yeah, we're not really going to be going into detail with that. So 5-minute fair value gap, we had the displacement. We could even say that we had a change in the trend, a market shifted to this, and price trades into that. And what is that we see in the 1 minute? First of all, it respects this little bit of a range that swapped liquidity, that mitigated that fair value gap, still respecting the high. And then we see aggression to the downside. We can try and sell from this one, from this one, or the lower one, which is a tiny one, but either way would have been a good entry. Of course, the stop loss has to be up here. Then we get aggression again. What is that we get? We, in this case, we just get 1 fair value gap that we could have traded into. Stop loss where? About this high. Then a little bit of a range, aggression to the downside. What is that we see? Another fair value gap. Keep in mind that all of these trades, if taken, of course, we're going to be looking all the way down to the low here, the target that we set since the beginning of the session. And that's pretty much it. Those are the 3-4 entries that we could have taken through the session. Let's use this tool, just this once. So we set 4.6 on this one, approximately 4.6. Then we get this one, trigger there, stop loss up here, target all the way down here, 4.8. Then we get this one, $4.46. I get this one. Note this like that. Stop loss has to be about this high, and that was the last trade. So we're talking about 4 trades, counting on the 1 minute entry, 1 minute alone. That's 4.6, 4.8. That's 9.2, I think. 9.4. Yeah, 9.4. Plus 4, it's 12.8. 12.8, and 4, that's 16.8. 16.8R minus 2R. That's a good 14.8R taken, which I don't know if the PM session continued with the trend. It didn't. So if we would have kept it till the open, till the close on the close of around 3 or 4 p.m. New York, I don't really remember what it was. It would have been a bit difficult because of course we would have taken basically break-evens, but we do have to keep taking partials along the way. And of course that's without counting these trades, but being through London, I'm not really interested in trading that. So definitely pretty good day. 16th, and off to the last day of the week, Friday. Friday I think we had news, so we'll be careful with that. As you can see, the steps, that's the thing you have to try and follow, is the steps that we're going through. right? Because we need check the midnight open, which could give us direction. We need to check the New York open, the session open, which could give us direction as well. And in this case, we have this is the open, this is midnight, and we'll do NY session open as well. So why not this session? Okay, so midnight, what did price do? Price traded a bit higher, not much, swept a little bit of a couple of lows, right? Nothing very important per se. A little bit of a range and aggression to the downside, then retraces, and when we get into the charts here, price is just ranging, has liquidity higher, has liquidity lower, but it has mitigated 50-minute fair value gap, right? That price could cause somewhat of a continuation. That's what we get up to. Okay, so yeah, I don't think we would have managed to get any sells unless we try to sell from here through London. I mean, let's see the reactions that we get there. Of course, on the lower areas, the lower fair value gaps that we had, for example, this tiny bit of a fair value gap could have been an entry. This potentially could have been an entry as well. This could have been an entry. Look at the equal highs here, so I don't think I would have traded this one. And then he finally gets to the one in the middle, I think it was, or well, the second one, because this is the extreme, this is the second one. What is it that price does when it gets there? Aggression to the downside, a fair value gap here, that's a potential entry. Stop loss has to be up here, plus a few ticks. Would have been respected. I would have not liked that at all. That would have been a bit difficult. But the entry from here would have been respected, so we'll just add it. Stop loss would have been to the high. Goes back up. All of this could have been entries. Let's just put some arrows on them to know that we could have taken a few losses on those. But of course, still stop loss has to be all the way up to the side on this one specifically. This one's could have had their stop losses up here or up here, right? So those ones don't really mind that much. Aggression here, this could have been an entry. Where's the stop loss supposed to be? Well, either here, which is a bit aggressive, or up here, which is conservative, but that would have been taken anyways. Just gonna avoid all of this because everything between this point and this point, everything in the middle would have been taken out as a loss. So we could say that maybe we could have taken 2 or 3 losses, but at the very least, this one would have covered for most of them through the end of the day. So yeah, we then get that one, then we get to 7 AM. So I'm gonna have to go now, and I'll continue the second part of it later, but yeah, I have to go right now. So be back in a sec. Okay, so trying to continue from where we left off, it's a couple of hours later. We're going to be looking at the session opening, right, which is this move higher. And clearly we're having a bearish trend. As an example here, we have had price continuing with that trend, just going lower. And what happens during NY session is that it mitigates a fair value gap here in the 15-minute, which is also an order block. And at that point, we have several things that we can do to try and find a position to enter. But the thing is that we could have predicted price going lower from this. So what I mean with that is just going down to the 1 minute, and the first fair value gap that we can find after mitigating this fair value gap on the 50-minute, we just sell that, which in this case would have been this one. Lovely entry. On where we also get another one a bit lower, which is fine. Right here. Of course, to be fully honest, we could have tried and execute from this one, right? Or maybe even this one, but at all times, at the very least, stop loss has to be up here, right? So first entry, this one, stop loss up to this high. Second entry, stop loss above this high. Price continues lower, fair value gap, potential entry, fair value gap, potential entry actually mitigated, and I don't know if you saw, but if we head back to the 5, you'll see how there was a 5-minute fair value gap right here. Right there. Which, if I saw correctly, we don't really get much of a chance to sell, but well, as you can see, mitigated and continues basically with the downwards trend that we were already having. What are we going to target? Well, we can easily target this low, which is the most recent low. We can go further away than that. I've seen ICT using Fibonacci to look for extensions such as 1. No, it can't be 1. Well, it can, but it would have been 2, I guess, which would have been a lower down here. Well, actually lower, higher than that. Maybe do 2 like that, 3, and then just take everything else out. Just need 0.5. So I guess this is something that we could have targeted, but being fully honest, I likely would have closed here unless I would have seen something in a higher time frame that we could have aimed for, such as this low, which, being fully honest, due to this happening, sweeping liquidity from the upside, then looking for this liquidity, would have been understandable, but a little bit hard to do so. Potential target, we'll call it. It's a sell. And same thing on this one, right? We could have just gone for this, which was a little bit of a tiny bit of a target. Or, well, we could have closed at 3 p.m. Let's call it 3 p.m. I don't really, I don't really remember if it was, no, it wasn't. I don't really remember if it was around the 17th, already the last day, okay. Don't really remember if it was 3 p.m. or 4 p.m., but we'll just call it 3. Here it's 5. Well, the market closes, but that doesn't really bother us. We could have closed there, which would have been a pretty nice position, although we would have missed a portion of our profits, maybe 5th, something like that. Well, actually more than that, 3rd, potentially. But yeah, beautiful trade, not gonna lie, or trading day. And let's try and, well, actually, let's do this first. We'll try and do a little bit of a resume. Not a resume, but we're just going to go over the price action. 17th, lovely price, lovely week, not going to lie. And we're going to start on Monday. One by one again, although Monday and Tuesday I didn't really show it to you, but what is that we got on Monday? New York midnight opens, trades lower then higher. We have random buy side liquidity on this high, but if you look closely, we even have this couple of highs. Keep in mind that we are in the 15-minute time frame, right? So this couple of highs were definitely swept by this move up, right? Then aggressively trades lower. If we would have been trading at this time, this definitely would have been a point of interest to look for sells, but what ends up happening? Buy side liquidity. Let's take that off. Run on BSL. I think that's actually quite a clear run on liquidity. So waking up to this and then the continuation to the very side would have been just lovely. Honestly, just a very interesting price action. We have already pretty good potential buys for the day. We just need to find that good entry, right? To, oh my god, to potentially profit from. So what happens on the session? I don't have New York opening apparently, which is in this candle. Session. So New York opens, trades a bit higher, continues lower aggressively, goes up, run on buy side liquidity, starts to go lower. And that's basically, we have different ways to trade the New York Open. According to what I've understood from the mentorship. But as you can see, these are pretty clean equal highs. Price goes lower here. Keep in mind that this is the candle where New York opens. We see aggression to the downside, but we don't really see any fair value gaps to trade except this. Stop loss would have been up here, so this could have been a potential loss. Continues to trade lower, no fair value gap, then aggressively pushes higher. And then you see 1, 2, 3, 4th. A lot of fair value gaps being basically traded. right? Or were basically happening. But this is key, because if I remember correctly, so I suppose this is New York Open, and we had this previous price action. We were expecting a bearish day, then a high being created, price opens in New York and trades above a high. That means that it has run on buy side liquidity. So what is it supposed to do next if price just goes from one buy side liquidity, well, from one liquidity or side liquidity to the other one? So if it has taken buy side liquidity, we're expecting price to continue to the sell side liquidity now. So this portion of price action tends to create fair value gaps along with displacement, and that's what we tend to trade. So basically that's what I mean with this. This could have been basically an easy way to understand that price has taken liquidity from the buy side, so now we're looking for sell side, which could have been considered this high, this low, could have been considered this couple of lows, but of course this will be considered, in my opinion, internal liquidity, and this external liquidity that we could have aimed for. So just wanted to mention that. Well, we have other ways to trade NY opens, but as an example, I suppose New York opens here, and we're expecting a bearish continuation, then price opens on this point is where New York session starts, and you get traded higher, manipulating people into believing that the session is going to be bullish. So it just trades against the trend, potentially reacts to a fair value gap in the 15 and 5, maybe even the 1 hour, it depends. And from there, it just aggression, market shift, fair value gap, potential entry to continue to go lower, right? Just following the trend that was created or indicated by the London session, right? So it doesn't really need to break or to take liquidity, but if it does, then it's kind of a really good way to understand that trend. But this price action here was just lovely. You can see how, well, we get the first couple of entries, then we get the 5-minute fair value gap that just causes the break of this major structure, which is mitigated, creates a fair value gap, which sadly is not traded. So this would have been the first entry, which requires a pretty high stop. Then this, which requires better stop. Same with this, which also contains a 5-minute fair value gap. Lovely enough. And well, this is potentially what we could have aimed for. Otherwise, we're going something further to the left, which is pretty far already. So I don't think we would have done that. That pretty lovely day on Monday. Could have tried to sell some of this, potentially close at 7, which is when we will look for that New York session kill zone, right? The kill zone of New York kill zone. Or of course could have held it all the way down to that close post New York session around 3 to 4 p.m. Again, I don't really remember what time specifically it was, but I just don't really intend to hold trades that long, or to hold trades till the afternoon. I just don't like it. I don't really like that. So what do we have here? NY midnight, we have opens here. What did it do before? We had this tiny bit of a wick, which means that it reacted to something. And if we check to the left, we have a high. So this is basically just manipulating people into just putting their stop losses above and trying to sell, and having buy stops just above with their stop losses around these levels, right? So it's just buy side liquidity basically, which price trades aggressively to the upside, starts to go lower, 15-minute fair value gap, which we could have tried to sell if we were awake on these times. And then we even have, well, let's actually look at that now. I will need to look at it later. But as you can see here, we could have encountered a loss, potentially same thing on this one. And as you can see, the high is still being respected. Can I just do it like this? The line is still, well, not the line, but the high is still being respected, and we have liquidity being taken aggressively and then aggressively going lower. Potential first entry, stop loss. I mean, aggressively can be above the high of this week, or sorry, the high of this candle, due to the fact that it is the first candle on the fair value gap creation, but potentially would have been all the way up here or above all of these candles that we have here that show a couple of wicks, right? That's what I believed I could have used, but didn't take it, so I don't know. What do we have later? Price trades above this couple of highs, a little bit of liquidity being taken, aggression to the downside, liquidity, sorry, not liquidity, fair value gap, which I'm not sure if I would have been triggered as it barely taps the level. But yeah, it is what it is. Aggression to the downside, fair value gap in this, stop loss above the high is respected. A little bit of a fair value gap here, which is not traded into. Then continues lower. 15-minute fair value gap trades into that. Aggression to the downside, definitely an entry. Stop loss would have been above this high. As you can see, very likely would have been taken out. But I can't really say for sure, because in some cases we can, well, actually I do add 2 ticks to the stop loss. Actually I add 4 ticks for the stop loss, 2 for spreads, and 2 for the, just in case, you know, just a little bit of a 2 extra ticks, just in case price decides to go a little bit higher than that. And then we have the continuation through, well, what becomes sell side liquidity potential target for our session, which is just this low goes here, just pending there. We also have this couple of lows, could have been this as well, who knows. So then we get into New York session. New York session, as you can see, we had a pretty impulsive London session. Price then into the New York kill zone starts to slow down for a little bit, then starts pushing against the London direction, right? And we get New York session begins while this retracement is happening. So you can see this aggression to the upside, which means that there are a lot of people trying to buy here, which just generates manipulation of liquidity, and well, the stop loss are potentially all the way down to this, right? Trying to hold through the entire session. But what we get is aggression to the downside immediately after, well, taking this tiny bit of a high, and I don't think it took this one. No, it didn't. It does respect something here, potentially 5 or even 15-minute fair value gap. Let's look at that. Well, it does mitigate this fair value gap, which is the most recent in the 15-minute time frame. All right, so that's something that we could have considered. And after that, we see aggression to the downside with a 5-minute fair value gap. That could have been our area to look for entries. What is it that happens when price gets there? Takes this little bit of liquidity above this high, aggression to the downside breaks many structures, right? Comes back up, mitigates the original or the origin on the fair value gaps, basically a first fair value gap created. But we also do get this one, which we could have tried to sell from with their stop loss again above here. What happens when it mitigates this? Aggression to the downside, fair value gap, potential entry, stop loss above this high. Mitigates this, aggression to the downside, potential entry, stop loss above here. Also keep in mind we have this here as well, which price could try to trade into today and continue to the downside. Then this is the first fair value gap that we see, and basically the last before reaching to this target, right? I think I did show this partially, I don't remember, but basically a pretty clean day. We would have had a better risk to reward ratio during London session, because as you can see, it really expanded a lot. Have the first interest all the way up here, and we're targeting all the way down here, which again, targets are very dependable of the moment. Of course, we understand that we're looking for buy side liquidity if we're buying, or sell side liquidity if we're selling, but in the moment we could have tried to choose something a little bit closer and not as far as that one was. But yeah, we never know for certain unless we're inside that session taking that trade. This day was quite good as well. We have, first of all, market opens at midnight, trades against the direction wanted to trade, pure manipulation, trades higher, range, impulsive move to the upside, a couple of fair value gaps here, which only this one is mitigated. Price trades into it, continues with the trend. As you can see at 7, we also see this retracement, which is something that I've seen a lot, where around 7 it just begins to go against the trend we were having during London session. So yeah, that's just something interesting to keep in mind. And I didn't really look for entries here, I believe. And all that I really did here was, well, we could have taken a buy here to this fair value gap. Very tiny one, to be fully honest, but this is a 5-minute fair value gap. Yeah, the price trades into, generates another fair value gap, potential entry, stop loss below this level. So comes back lower. This could have been a potential sell if it would have been expecting a sell, but due to the midnight open, we're not really expecting that, right? So what happens? There are potential buys around these levels where we could have taken losses, but look at how it generates this clean equal lows, right? So by generating this clean equal lows, we understand the price could easily just look for that to then look for the buy side liquidity. There it is from this high, or will this point that we have a little bit closer, right? So as you can see, price runs below the lows and immediately starts pushing higher, which is a very good indication. And what is it that we get? We get a couple of fair value gaps. Here's the first, and actually first and only potentially. Didn't really check other time frames because, as an example, when it's wiki in some time frames, see how here we have another fair value gap happening that we just didn't really notice by not changing the time frames. But yeah, just wanted to mention that. Still would have managed to catch that potential opportunity, and really the only one, because sure, we do get a fair value gap here which is traded, but entering here stop loss should have been around this level, right, which is a less than a 1-to-1. Looking for that buy side liquidity. It's definitely not really worth, but you can see the pattern, you can see how it repeats itself, due to the fact that we see manipulation in both sessions, right? In both openings, better said, during midnight and during the New York Open, the New York session. So midnight starts here, trades a bit higher. We have a 15-minute fair value gap. What is it that we have here? Well, to the left, we have a tiny bit of a buy side liquidity being taken, aggression to the downside, fair value gap is respected, then generates another one, fair value gap is respected, and starts pushing higher, or lower, sorry. That's what we get from the from the midnight session. And when we get up, what is that we have, or we get into the charts? We have this low to potentially target. Price has taken clean equal highs from this point and start pushing lower here, right? We have a clear bearish trend, so we're going to be looking for sells. And again, around 7, price starts to retrace. NY session opens here, and as you can see, trades aggressively to the upside. Look at this huge green candle. We go down to the 1 minute. What is it that we're having all the way to the left? Liquidity after liquidity after liquidity, right? Many buy side liquidity being taken. Potential first entry would have been a loss. Equal highs created. Aggression to the upside takes those highs. Aggression to the downside generates a fair value gap where we could have tried to solve from. 5-minute fair value gap generates even another entry, then another, then another, and all of them targeting this. As you can see, we get out right before this major retracement against us, right? Again, and why midnight opens in what direction when it really wants to go to the other one, and same happens around the opening of the New York, right? And that move against the trend is really just manipulation. It wants to make people believe that as price just opened and it aggressively started going higher or lower depending, it just has a not opportunity but probability of the entire session being in that direction. And it's just pure manipulation that we're just looking for to trade well against that manipulation, basically not being a part of the group that is going to be seduced into that manipulation, but all actually trade in favor of that manipulation, right? Use that manipulation in our favor, if that makes a little bit more sense. So again, midnight opens, trades a bit higher, trades a bit lower, a bit higher. Basically it just ranges. We do have that price has been pushing lower, right? But nothing very clear per se. And we just see this aggression to the downside. Fair value gap is respected here. And when we start the session, we see price finally expanding to the downside, right? Expanding to the downside. And the only bad thing is that a lot of liquidity has been left behind up here. Doesn't necessarily mean that it has to get up there right now or anything close to that, but well, it is a little bit annoying because something like this right before the initiation of this retracement sweep of liquidity would have been amazing to see, right? Because there would have been a really good confirmation the price is likely to continue to go lower. Not definitely, but likely. So New York opens on this candle. You can see aggression to the upside, but what is it that we have? So we have a bearish trend, right? Or a supposed bearish bias. We have a 15-minute fair value gap, 2 15-minute fair value gaps, and New York opens aggressively to the upside. So we have that potential manipulation. We have a fair value gap following that bearish trend that we're expecting. So what is it that we're going to be looking for in this price action? We're just going to be looking for sells. We're going to be looking for reasons to sell, simply. right? And what is it that it does? Well, it aggressively goes higher and then aggressively goes lower. As you can see, first parabolic gap, let's suppose we ignore that one because it is the first thing that we see and it's just a 1 minute time frame. Let's suppose we get into this one, stop loss about this high, want to be safer, stop loss about this high, and that's the only entry that we would have gotten through this thing, right, through this price action. So with a little bit of an aggressive stop loss, my opinion is safe, but could have, oh, we have two targets, okay, yeah. So close one would have been 4.58 or 2.47 depending, and second one we're looking at a 5.81 or up this high 10R, right? Both potential opportunities. What else could we targeted? I don't know if we can get the Fibonacci again on this one. Guess it could be funny. Well, look at that. The two, or the basically we have this retracement, right? This impulse or this amount of price action is equal to 1 to 2, right? So if we measure this from 1, which is around this level up here, we're talking about 25 pips, and we go down to 2, it's 25 pips. To those that don't really understand Fibonacci, but I'm pretty confident that most of us do. So as you can see, the potential target on sell side liquidity was not right on that level, but definitely a very good potential. A little bit of an extra confluence, right? At the end of the day, it's not something that we just gonna take that for granted, right? But extra confluence is never bad, right? But here, so what is it that you should take from this video? Each and every single day that I, between quotes, backtested, or will I revisit it at the end of this video, has a series of steps that I'm following. A series of steps that, as an example, this week allowed me to get a 20k MFF challenge account that was standing at 19,140, if I remember correctly, was the lowest point of it, all the way back up to 20,000 to just get the retry and allow myself to retry from, well, the 23rd is when it is restarted, which is what, Wednesday, actually Thursday, so I'm guessing I'm gonna just skip next week all the way up to 27th of June 27th. And basically the steps are what I will like to see is exactly what happened almost every single day in Aussie dollar. A clear London session that on the midnight had a clear manipulation. So it opens, aggressively trades in one direction, but then immediately changes after potentially sweeping a high or a low, depending. And then you see aggression after it swapped liquidity. And why is that? Because if you see or continue to backtest this this way of trading, whether it is from Aussie dollar, Euro dollar, or any other pair that you want to trade, you realize that this when you see that manipulation so clearly, and the London session has a clear direction, New York will tend to just follow that. And when I say will tend, I mean that, well, it's very likely to do it. I don't think I've seen NY trading against London. But what I mean with that is, as an example, because here NY is trading against London, right? But it didn't break any important levels. It didn't really go above this high or above this highs, which is an example. If it would have traded above here and then traded lower, it would have continued. I would have believed that that trend was not violated at all. But, well, you know what I mean. So when I start trading, when I get on the charts around 6:30 New York, what I look for is what happened at midnight and do we have a trend. After that, all that I look for before NY opens, before the 8:30 open, I look for fair value gaps in the 5 and 15 in the direction that the London session had, to when price trades into those fair value gaps, those higher time frames fair value gaps, we just look for the 1 minute, maybe something a little bit higher, like the 3, the 2 minute, to generate another fair value gap after reacting to these fair value gaps, right, in the higher time frames. On the other hand, when 8:30 arrives, maybe even a little bit before that, I want to see a move against the trend, manipulating people into believing that the session will be bullish or bearish, and then looking for confluences to go completely against that. Completely against that. If it sweeps a high, even better. If it reacts to a 15-minute, 5-minute, 1 hour fair value gap, a higher time from fair value gap, great, even better, right? Just extra confluences. And then I'm just looking, honestly, again, like as an example, you've seen that most on Aussie dollar, most of the NY sessions had this low, specific low, which basically is generated before New York opens, and when New York opens continues in the direction of that low, in this case, that was created, right? So if a high would have been created, then New York opens and continues lower. But then if we see signs of reversals where we can sell, then we're going to be targeting that low, right? Because if people were bullish as soon as New York opened, New York session opened, their stop losses, safe stop losses, will be all the way down here. And they could think that, well, if that fails, if this low fails, then I'm definitely going to be bearish. So there are going to be a lot of sell stops below here and a lot of buy limits with stop losses down here. So that's what I'm looking for every single day. And that's what I recommend you to basically just go to your charts and see if it occurs or not. Because for me, it has occurred quite how do I say this? Often, almost every single day. Again, this on euro dollar this week, I was able to determine the bias 4 out of 5 days. The only day that I wasn't able to was on Thursday, which went aggressively to the upside. And they took a couple of losses, but nothing compared to what I had made on the previous days, and well, on Friday as well. So it's something really interesting, something that, again, of course, this is taught by ICT. So you hearing it from me is just me trying to, well, paraphrase what he's said or his thoughts through his ICT mentorship on YouTube, which is of course for free. So yeah, this has been a pretty amazing week for me. Very happy about it. And all that I'm doing with this video is that if you're struggling with your strategies, just try this. Try what I've shown you in this video. Try learning from ICT first, because if you try and get all of the concepts from just this video, you're gonna be very short with it, because I haven't explained a lot of things he's explained, and it's really worth it. It's really worth it. He sometimes talks a lot, but it's really worth it. Really worth it. So yeah, just this is all that I wanted to mention. I hope that you were able to understand the steps that I follow. You can see I uploaded a video recently where I show the steps that I follow through a live session. That live session ended up working out lovely. I really liked it. Reason why I made it publicly, otherwise it would have been for my private group. And yeah, you can see how I apply every single thing shown here, but on those charts, on live charts. And I actually take some executions, of course, paper trading only. And yeah, hope you learned something from this. Hope you enjoyed it, and I'll be seeing you on to the next one.